Meta Platforms just revealed what they are going to spend on data centers in 2025. We already know that Microsoft is good for about 80 billion. We have that project Stargate, which has anywhere from $500 billion maybe to $150 billion in data center spend. Later this week, we'll hear from companies like Amazon as well. Today, we hear from Meta. And the company just announced their Q4 earnings. We'll get into these. I mean, these are just, we're kind of burying the lead that this company had a massive amount of revenue, $48 billion in the most recent quarter. That was still 20% growth for a $1 trillion company, just absolutely staggering. We'll also tell you where the company is coming in with a first quarter guidance as well. Obviously, the fourth quarter, you have holiday shopping, a lot of ad spend. So it's a very good quarter for the company. But we'll talk about the first quarter as well. Talk about where that came in, at least when you talk about expectations for the company, what that means for the rest of the year with Meta as well. We'll obviously talk about their data spend, compare it to what they spent last year on the data center. Newsflash and probably spoiler alert, it's a lot larger than last year. We'll connect the dots a little bit. If Meta and Microsoft and all these companies are going to be spending a lot more on the data center, well, obviously you can connect the dots to the other semiconductor companies. We'll look at this company from a profit perspective. It's just absolutely fantastic. We'll look at the balance sheet. I don't think we really need to. We'll look at cash flows. This company is buying back the shares. They're also paying a dividend. Props to Meta for paying a dividend. I actually like that a lot. We'll also talk about Reality Labs. We changed the name from Facebook to Meta. And the Reality Labs business still bleeding money, but maybe some of that carries over to some other things. And we'll also look at this technically. We're setting up at the top of the range, and at least in the after hours, we're holding those levels. We've got our gold chain out. We're fluffing up our hair like Mark Zuckerberg, and we're going to be talking about Meta Platforms Q4. What is going on, investors? Hopefully, you guys are doing well out there. Well, Meta Platforms, look, over the past year, you're up like 69% on this one. Even year to date, it's running up over 15%. I mean, we're pulling forward a lot of performance. And look, Meta is delivering. They are performing very well. Revenue came in at, like we said, $48.4 billion. That was 20% growth year over year. Beat expectations by about $1.4 billion. Let's get to the Q1 guidance. We'll talk about CapEx spend here in a moment. They're talking about their Q1 be between $39.5 billion up to $41.8 billion. That's on the revenue side. You're probably wondering what the Wall Street expectations were. Well, they were actually like right around 41.6. So the high end estimate is right at expectations. The low end at 39.5 is actually coming underneath expectations. The low end guidance or low end expectations for Q1 was right around 39. All things being considered, basically in line, if you will, with Meta. That would be about 14% growth. I think it gives us confidence as we look out into Q2, Q3, which aren't historically super strong quarters for the company. You're going to do about 14%. I think where the estimate probably needs to get ticked up at some point is as we move into Q4 of this year. You're expecting 14% growth, assuming the economy, unemployment, all those types of things stay relatively the same. Well, you just did a quarter of $48 billion. I would expect the Q4 to be at least 53, maybe even a little bit higher over at Meta. So those are all very good things, very much in line with expectations. They gave us guidance for the expenditures over at Meta. I like how this company does this. What they also do is in future quarters, they either tighten these up, they extend the ranges. They're saying that they're going to spend $114 to $119 billion. That would be total expenses. That includes employees. Now, if we want to strip out the employee cost, just your capital expenditures. Now, this is primarily data centers for Meta, as they don't have warehouses like Amazon and they don't have other types of things that they're building. They already have their campus built out here in Northern California. So they're not spending any of these capital expenditures really on anything other than data centers. We got a total of $60 to $65 billion for the full year for Meta. Now, some of you are probably wondering, well, what did they spend just this last year, since we just got Q4 numbers? That's a great question. They spent on property, plant, and equipment, which is basically CapEx for Meta, $37 billion in 2024. So we're going to go from $37 billion up to 60 to 65. And depending on how things go, I would assume that probably could expand even further. The year before, in 2023, we spent $27 billion. So we're actually seeing a little bit of an acceleration here from 27 to 37, now all the way up to 60 to 65. Now you throw in what Microsoft is going to spend, obviously Amazon and the rest, and obviously this is particularly bullish for the semiconductor industry. We have an ASML video already posted here on the channel. I think the equipment makers like ASML, and there's more equipment makers than ASML. There's a lot of them. They're all probably going to benefit over the next several quarters as you're going to have a pull forward of the equipment makers, since the semiconductor manufacturers need that equipment to meet the demand that is coming, and it's coming rather quickly. Now, from a revenue perspective, like we talked about, just a big quarter, okay? $40 billion last year, $48 billion. That's why I'm looking. So they grew their top line by about $8 billion. Now, I understand there's kind of a law of larger numbers, but there's also a law of scale when you're talking about Meta. They're rolling out more ads. They talked about the ad load as well. Increased impressions, 11% year over year. So they're going to just continue to serve more and more ads. So when you're looking at Meta for the Q4 of next year, we've only got a number that's about $7 billion over the quarter that they just did. I think this company could probably come closer to $10 billion. Again, assuming all things being equal, unemployment's decent, people are having jobs, people are advertising, businesses are forming, all those types of things. Obviously, that's a huge wild card as we move to the rest of the year, but we'll see what happens. Company is wildly profitable. Okay, total cost and expenses, just $25 billion. Folks, look at this. They grew their revenue by over $8 billion on the top side, but they only grew their expenses by less than $2 billion. I mean, they are running things super efficiently. And this is what, we'll go on a somewhat of a side tangent right here. This is what has me so excited about the robotics industry, because what AI is doing to Meta's business is showing you that they actually need to spend less on these different types of expenses. That is because AI is helping the developers and the coders code. They're making them more efficient. They're shipping product, I would assume, more efficiently and better products over at Meta, certainly on the ad side. And so they are seeing dramatic revenue jumps while not having to increase expenses. So we didn't really see this during the pandemic. They had to scale up the employment. They had to scale up the workforce. We're actually seeing a reverse of that. Their revenues continue to scale up while their expenses drop. So companies that rely on human labor, like the Amazons, maybe even like a Tesla out there, once they can start replacing more and more of that with robots, and you have to put aside your own little personal feelings about people not being able to work in warehouses and not do backbreaking jobs. How you care about that, I don't care. I'm just saying from a fundamental investment standpoint, this is a thing of beauty, because look what it does to your income from operations. Last year, $16 billion. Boom, almost all of your revenue gains came all the way down to income from operations to $23 billion. We grew our net income by over $6 billion. So we tacked on $8 billion to the top line, and we tacked on over $6 billion to the bottom line. That is a thing of beauty. Companies like Amazon, once robotics scales up, it's exactly what's going to happen there. Just in the case of Amazon, you have $500 billion worth of revenue, rather in Meta's case, closer to 100. So you can imagine what it's going to do for that stock. From a balance sheet perspective, company has a boatload of cash. You wonder why and where they're going to spend this money on these data centers. Well, they have plenty of money. And in the case of Meta, you don't really have a lot of things to spend this money on other than share buybacks and those types of things. You do carry some long-term debt over at this company, but it's balanced off 100%, more than 100% in cash. From a cash flow perspective, you can imagine you tack on $6 billion, a little over $6 billion to your net income side. Well, you tacked on about the same amount from your operating cash flow over at Meta. Spent about $14 billion on property, plant, and equipment. That is about the run rate that they are going to be on. If you're going to spend 60 to 65 for a whole year, you're on about a $15 billion a quarter run rate. So that is actually something that is expected to accelerate as we get into Meta's quarters later this year. Q1, Q2, Q3, Q4, you should actually have a gradual increase in property, plant, and equipment. That means semiconductors, the back half of the year will probably be better than the first half of the year, because we're seeing the same thing over at Microsoft. Company is buying back. Well, no, actually in the most recent quarter, they didn't buy back the stock. I actually like the discipline at Meta. The stock's basically been sitting at 52-week highs during the entire quarter. Props to Meta for not actually stepping in and buying back the stock. you're continuing to pay dividends over at this company. And so that gives you a little something for a shareholder perspective. But pulling back on the buybacks, I think that's what we're going to see this year. Instead of spending the money on the buyback, they're going to invest it in property, plant, and equipment. And this has been my rub with big tech for the past couple of years, is the only cool thing that they've been doing with their money is buying back the stock. Part of that is the fact that you have regulations. Meta can't go buy Snapchat. They can't go buy Pinterest. And I don't expect that to change under the Trump administration. I don't think they're going to be able to go out and buy TikTok, although we'll talk about the rumors when we do a Microsoft video where they might be in the market for that. So the company can't do a transformational acquisition, so they've just been buying back the stock. Well, now I think you can kind of pause the buybacks and actually reinvest in the business, and that's exciting from a growth perspective, at least more exciting than buybacks. Not that buybacks are any good, but it is very exciting. Now, from a Reality Labs perspective, we know the rest of the business is absolutely flying, but Reality Labs has just never scaled up into a business model that's worth anything. It continues to bleed money. We assume, though, some of these products could be down the pike. At CES, the Consumer Electronics Show a couple of weeks ago, I was trying on all the smart glasses. Certainly Meta can be a leader there. I know there's plans for maybe a watch and other types of products. So you certainly have those things coming from Meta. From a technical perspective, you are still very much in this uptrend. It doesn't matter really how long you want to stem this back. We were on a breakneck trend. It's kind of flattened out. You're at the top of the range here. I don't typically want to buy stocks at the top of the range. You're waiting for pullbacks in Meta, but I wouldn't be overly greedy. Any pullbacks in this one, it certainly has rebounded very nicely, at least over the past year or so. And nothing in these results have me to believe that Meta is going to slow down anytime soon. Business flying on all cylinders. They continue to put more and more ad impressions on their platforms. I think they can continue to ramp that up. And then depending on what happens with TikTok, that could be an interesting situation if it moves into a hand of like a really worthy competitor, a well-capitalized competitor like Microsoft. Could mean just more competition for Meta, but I think Meta, more competition, they actually flourish. They actually do well with competition. And so this is a company that is firing on all cylinders, and I would expect it to continue to do so. Meta up about 1.7% in the after hours after being about 0.3% during the regular trade. You are now at a new 52-week high or very close to one with Meta. Hopefully you guys enjoyed today's video. There's more coming. We'll see you then. Good luck with your investments.